dampened demand for real estate in Metro Vancouver and some home prices falling, there is another possible repercussion of a slowing market.
Vancouver Airbnb listings dropped 22% in a single year. That's not a forecast, that's not a warning, that's the number the BC Ministry of Housing published after the province forced thousands of short-term rentals off platforms like Airbnb and VRBO. And nowhere felt that shift harder than Kitsilano, one of Vancouver's most desirable neighborhoods, where investors who spent years running profitable Airbnb operations suddenly found themselves sitting on properties that no longer made financial sense to hold. Right now, the average condo in Vancouver has lost roughly $50,000 in value compared to 18 months ago. Condo sales across the city are down 28.7% year over year as of January 2026. And the BC Real Estate Association says residential prices across the province dropped 4.2% in May 2025 compared to the same time a year earlier. So what exactly happened? And what does it mean for homeowners, renters, and investors watching Kitsilano right now? Let's get into it. Here's what actually happened. On May 1st, 2024, the BC government passed the Short-Term Rental Accommodations Act. Premier David Eby said it plainly, short-term rental apps like Airbnb and VRBO had, in his words, caused the loss of thousands of long-term rental homes across British Columbia. The new law had one core rule. If you own a property and want to list it on Airbnb, it has to be your principal residence, your home, the place you actually live. You can also rent out one secondary suite or laneway home on the same property, but that's it. Any investor who owned a second condo purely to run as a short-term rental, that was now illegal in any BC community with a population over 10,000. That included Kitsilano. That included all of Vancouver. And the government didn't stop there. As of May 1st, 2025, every host operating a short-term rental in BC had to be registered in a new provincial registry. If you weren't on the registry, Airbnb and VRBO were legally required to delist your property and cancel your bookings. Before the registry launched, BC Housing estimated there were roughly 28,000 active short-term rental listings across the province. By April 2025, only about 15,000 had registered, meaning approximately 7,000 operators either couldn't comply or decided to walk away from the business entirely. Fines for non-compliance? Up to $3,000 per infraction per day. The tone shifted fast. Now let's talk about what this actually means on the ground in Kitsilano. Kits, or Kits as locals call it, sits right along the waterfront between downtown Vancouver and the University of British Columbia. It's walkable, beach-adjacent, and has been one of the most searched neighborhoods in the city for years. Naturally, it was a magnet for short-term rental investors. Before the crackdown, a well-run Airbnb and Kits could pull in far more per month than a long-term tenant. That's why so many investors loaded up on condos there specifically. It wasn't just a place to live, it was a revenue stream. When the law kicked in, those investors had a problem. They couldn't legally run Airbnb anymore unless they were living in the unit. So now they had three options: move in themselves, convert to a long-term rental, or sell. A lot of them chose to sell. According to Zolo MLS data as of early 2026, there are currently 137 active listings in Kitsilano, including 65 condos, and homes are sitting an average of 23 to 24 days on market. The median condo list price in the neighborhood is sitting around $773,500. Condos across Greater Vancouver hit a benchmark price of $710,000 in December 2025, down 5.3% year over year. And in January 2026, Greater Vancouver-wide condo sales dropped 28.7% compared to January 2025. New listings jumped 178% in a single month. Buyers aren't rushing, sellers are adjusting. The numbers don't lie. But here's the part most people aren't talking about. The short-term rental ban didn't arrive alone. It landed in the middle of a market already under serious pressure from multiple directions. The Canadian Mortgage and Housing Corporation, CMHC, reported that Metro Vancouver saw a record 12,442 condo completions in 2024 alone. All that new supply hitting the market at once, while buyers sat on the sidelines, created a real oversupply problem. At the same time, BC's population actually shrank by 2,357 residents in one quarter of 2025. Immigration policy changes at the federal level reduced the number of international students and foreign workers coming into the province. Less demand, more supply. You can see where this goes. Century 21 Canada reported that downtown Vancouver condos dropped from $1,264 per square foot in the first half of 2024 to $1,026 in the first half of 2025, a 4.6% decline. For a typical 500 square foot unit, that's roughly a $29,000 drop in value in 12 months. And RE/MAX's 2026 market outlook noted that real estate investors are, and this is a direct quote, almost non-existent in Vancouver right now. The report said there are very few opportunities that wouldn't require negative cash flow. For a neighborhood like Kitsilano, where investors used Airbnb income to offset carrying costs, losing that income stream made the math brutal. Average asking rents for a two-bedroom in Vancouver fell from $3,440 in 2024 to $3,170 in 2025, according to Statistics Canada. So not only did sale prices drop, the rental income investors were counting on as a fallback also dropped at the same time. The situation got messy.
Before we get into where Kitsilano goes from here, if you find this kind of breakdown useful, hit subscribe. We cover real housing data, real numbers, and real market shifts every week. So who is actually affected by all of this? If you're a renter, the data is starting to move in your favor. The BC Housing Minister confirmed in December 2025 that Vancouver's rental vacancy rate more than doubled from 1.6% to 3.7%, the highest rate in more than 30 years. Rents in BC dropped 8.5% over the past 2 years. In Kitsilano, units that were locked up as Airbnbs are now becoming available for actual residents. That's real. If you're a buyer, this is the most buyer-friendly Vancouver market in years. The BC Real Estate Association's latest data shows a sales-to-new listings ratio of 21% across Vancouver, firmly in buyer's market territory. You have more properties to choose from, more negotiating power, and prices that have already pulled back from their 2022 peaks. But analysts at RE/MAX are warning that buying at today's prices and then waiting for a fast rebound isn't a safe assumption. The market is not expected to bounce back sharply in the near term. If you're an investor who bought in Kitsilano expecting Airbnb income to cover your costs, the math has changed significantly. Carrying costs in Vancouver have risen 29% since 2022, while average rents have only increased about 12% in the same period, according to CMHC. Investors who bought at 2021 or 2022 prices are now renewing their mortgages at higher rates and lost their Airbnb revenue. Many of them are selling at a loss or breaking even at best. And if you're a homeowner already living in Kitsilano, your property's value has dipped but hasn't collapsed. Detached homes in Kitsilano still carry an average listing price around $1.9 million. The neighborhood consistently ranks in the top 3 in all of Vancouver for how quickly homes sell. Long-term, the fundamentals of the area, the beach, the walkability, the schools, haven't changed.
As of right now, the BC government is calling the short-term rental crackdown a success. Housing Minister Christine Boyle pointed to the vacancy rate data and said renters across the province are finally finding homes for less. But the BC Real Estate Association pushed back in September 2024, calling for significant amendments to the law. Their concern? Groups like people attending the FIFA World Cup 2026 in Vancouver, a massive international event, won't have enough places to stay because thousands of short-term rentals have been permanently removed from the market. Airbnb Canada went public with the same concern, saying the rules could hurt tourism without making housing truly affordable. Economists at SFU and UBC have been more cautious about the whole thing. Andy Yan, director of the City program at Simon Fraser University, said there are simply too many competing factors, interest rates, immigration changes, economic conditions, to pin housing shifts on the STR ban alone. What is clear is this: Kitsilano's real estate market in early 2026 looks nothing like it did 3 years ago. Investors have pulled back, inventory is up, prices have been corrected, renters have more options than they've had in decades, and buyers who were priced out in 2022 are looking at a window that may not stay open forever. Everyone is watching what happens next, and that's why homeowners, renters, and investors across Vancouver are all paying close attention to every new number that comes out. If this gave you a clearer picture of what's actually going on, share it with someone who needs to see it, and subscribe so you catch the next update when the data moves again.